Today, we are going to look at three possible scenarios for Bitcoin and crypto. Obviously, we haven't seen the blow off top in November. We are struggling at around 90 or 92,000 as we speak. But what are these three scenarios? Well, before I begin, can I please ask you to like and subscribe to Crypto Warehouse and help us grow the channel? Now then, the three different scenarios that we're going to look at today. Number one, the bull run is over. That's the one the majority of so-called influencers are telling you. Number two, the bull run is yet to pass, and we are going to put in a new all-time high. That is the second scenario. And the third scenario, and the one which is gathering momentum, is the 4-year cycle is dead, and therefore the bull run is neither over or yet to begin. Now, I'm going to take you through three sets of information. Now, ideally, I'm going to try and do this video in one go. But if we start to get to 30, 40 minutes in length for this video, I am going to trim it down and I am going to try and cut it up as well. So we're going to go through them one by one. I'm going to go through the data I have for each scenario. And at the end, I'm then going to give you my conclusion as to where I think we're going to go over the next 3, 6, and 12 months. I was going to do this as a live stream, but to be honest, I think we need some kind of on-screen prompts. I need to do some editing with some of these things, so it wouldn't really have worked to the live stream. So we're going to try and do it as a video, and this isn't just for OGs, it's going to be for everybody. And this is not my opinion, but this is the opinion of the markets. I've looked at the three different scenarios, and I've tried to bring information in that matches each of them. So let's get into it with option number one. The bull run is sadly over. Option number one then, the bull market is over. $126,000 was the top, and that was in October. Now, we're going to go through the supporting evidence of this. As you can see on the screen now, we have Bitcoin dominance. This did start to break down, which was starting to hint at potentially an altcoin rally. However, as we can see here, it has started to move back up and recently has been rejected at its own bull market support band, but it looks like it's about to probably have another crack at doing that. So Bitcoin dominance didn't break down. The alts didn't get their run, and Bitcoin is consuming more and more of the market. This is probably one of the biggest signals to me that alt season is not around the corner. And in fact, Bitcoin dominance is simply reflecting the fact that the inflows into Bitcoin through the likes of the ETFs are just going to keep Bitcoin powering up and up and up. And therefore, we will probably not see a blow off top all-time high. Now, the next piece of evidence is this. And that is that we are approximately 19 months out from the April 2024 halving. Now, historically, and again, we can only go off cycles rhyming, not repeating, and that's the buzzword here. Repeating is not going to happen, but rhyming does. History doesn't repeat, it rhymes. Now, historically, it's about 18 months after the halving. So April 2024 would take us, guess where? To October 2025, which is where we put in the $126,000 current all-time high. Now, we are seeing a retracement from that line. We are already down 30% from that all-time high. And we are pretty much exactly down 30% from that all-time high, which again is what you do in a bull run, yes. But I don't know whether that is just the beginning of the end. And on this chart, if we can go back to the monthly and we can show you kind of what happened in previous cycles, we have put in somewhat of a higher high top on both of the previous cycle and this cycle's tops. So are we starting to see the real breakdown? We've replicated what we've got here, already this year. So we've had two pretty big drawdowns, which we also had back in 2021. So there is a similarity there. As I keep saying, this is not about repeating, this is about rhyming. So we are close to where we think we should be. We are in the time zone of where we should be. We're in probably the price action of where we should be as well. If you look at an 18,000 bottom, for example, we are a solid 6-7x up from the all-time lows, which is a pretty good return, albeit diminishing return for Bitcoin. The next thing to look at then is more to do with the macro, and that is the global M2, the money supply. Now, for a very long time, you were getting a lot of very big influencers. Raoul Pal and I believe one of the guys from Crypto Banter was saying that Bitcoin lags the money supply. This held for a considerable amount of time and then broke down probably about 3 or 4 months ago to show that the divergence was in fact there. And we're probably more aligned with the S&P than we are with the money supply. But the M2 money supply slowed to 3% this year. So there was no new money coming into the market. The Eurozone had a liquidity crunch. The UK has got its own problems. So if you compare 2021, where money was being sloshed into the market because of COVID, 4 years on, we don't have that. And the money supply and the money printing and the drop in interest rates and all of these things, none of these things have happened. So Bitcoin is attempting to put in new all-time highs, 150, 250, 350,000, whatever your favorite collars told you. That's simply not happened because there's no new money. And we do need that money. The S&P needs that money. Everything needs that money, and it's not come to pass, yes. Now, the next few points on here are quite technical, but we'll go through them anyway. So we are now about 12 or 13% below the realized price of $103,000. That's according to Glassnode. Distribution as average holders enter loss territory, similar to April 2025 dip below $70,000. So we have multiple different price targets for Bitcoin. We obviously have the bull market support band, which I talk about a lot. That's the moving average. We have the realized price. We have the all-time high. We have a lot of prices that we can look at when it comes to Bitcoin. We are in loss territory, which is the same territory we were in back in April when we hit $70,000. So a lot of people are feeling the pain. A lot of people buying at 110 to 120,000 are now 20% in the loss. Their decision is, do we just cut our losses and leave, or do we hodl? And that's the big question. So then, what about your favorite alts? This is the current state of the altcoins on your screen now. We are down below 2021 highs. So we've broken below the peak of 2021. They're down 25, 35% since the October high. So we are now below $1 trillion. We're at 880 billion as we speak. And without Ethereum, the alts look lost. Now, that doesn't mean that the alts are finished. What it means is there's no alt season. We've not seen that massive blow off top that we saw in 2021. And that can only happen if Bitcoin dominance breaks down and Bitcoin starts to have its own blow off top, and then the money comes into Ethereum and the money comes into the alts. We've not had that. So this isn't a surprising chart by any means. This is probably where we should be at this point of the cycle. Whether we finish the cycle or not, this is where we should be. So again, not overly concerned by this, but is an indicator that maybe the cycle simply finished with a whimper rather than a bang. The next indicator that the market is seeing a downturn is, of course, exchange volume and exchange levels. Now, in a really bullish market, you will see dramatic falls in the number of Bitcoin and Ethereum and the likes of XRP. You will see a dramatic fall in those coins on the major exchanges. That's because, very simply put, whales don't believe they need to sell anytime soon. When you see exchange reserves tick up, that's a sign that whales and the market in general are moving their coins to exchanges in preparation to sell. Now, we've not seen any drawdown, massive drawdown in exchange volume. Okay, it's still there. And that's a big reason why potentially there is no bullishness in the market, because the whales are not moving them off the exchange and into their cold storage. And for me, this is more about potentially selling rather than accumulating those additional Bitcoins, Ethereum, XRP and Solanas and the like. So, again, not a good sign. Now for the RSI, I know a lot of people don't put a great deal of faith into the RSI, but I have to include it. The RSI on Bitcoin fell below 50 after getting up towards 78 in October. This is the lowest level it has been since 2021, pointing to that horrible word that begins with an E, exhaustion. Are the bulls simply exhausted? Have they run out of steam? They have been fighting not just the bears during this cycle in 2025, but they've also been fighting the macro. Donald Trump was supposed to come in and pump our bags. Instead, we had the tariff war, which brought us down to 70,000. How much of a dent did that put in the confidence of the bulls? We then had the October the 10th crash, which again absolutely liquidated billions and billions of dollars out of the market. Again, another shock to the system. So what are we doing? How do we get there? There is definite exhaustion in the market. Next up, of course, as we've just mentioned, is Donald Trump. Donald Trump promised lower interest rates, more money into the economy. He promised us a Bitcoin strategic reserve when he was elected on January the 19th. We still haven't seen the Bitcoin strategic reserve, the Clarity Act, the Genius Act. None of these things have come to pass yet. And that's what we're going to talk about in another section. But they're still not here. And if they're not here and the bus leaves, it's gone. And it's too late for those to have an impact on the price. But what if everything was priced in? What if the $126,000 was simply the all-time high with everything priced in? And maybe we got to this point and the bulls went, you know what? It's not going to happen. 126,000 is the top. We're going to retrace. So even though we have Trump, even though we're likely to see Chairman Powell being replaced early next year, everything else that was promised, promises made, promises kept, they're not going to be kept in 2025. It looks like 2026 is when those promises will be kept. What about the ETFs? Well, in November, they sold up. Again, we cover the ETF volumes on our streams, and normally, we talk about this a lot, there are about 7 green days for every 3 or 4 red days. So twice as many green days, basically, than red. And in November, they simply sold. I think $3.5–4 billion of outflows from ETFs in November so far, and that has put a drag on the market. So the ETF sold, as well as everybody else. And then the final point that we're going to make is very simple. The cycle history. We are already down 30%. If we compare this to previous cycles, that is normally the drawdown before we get the relief rally that we've talked about, and then we get the final move down. And that final move down takes us into the full-blown end of the bear market. Now, something to point out about the bear market before we move on. A bear market can last roughly 12 months from top to bottom. So the good news is, if this scenario does play out, then October 2026 will be the bottom of the bear market. What else does that coincide with? It coincides with the midterms in America. Maybe we see $50, $60, $70,000 Bitcoin. Maybe we see that in October next year at the pits of the bear market. And whichever one of these scenarios we look at, we're going to get a bear market, whether it be a simple 40% correction, 50% correction, or the full 70, 65% correction. Whichever scenario we look at, we will get a bear market. As night follows day, these things run in cycles. The S&P does. Everything runs in a cycle. So this is the bearish scenario. This is the cycle is over. We've seen the buy the rumor, sell the news. We've seen the macro change. We've seen the potential all-time high following the April 2024 halving. What do you think of this bearish scenario? This is scenario 1, remember. There are still 2 more to go, and this is why I couldn't do this as a live stream, because there's simply too much information to put in. But this is the bearish scenario. What about scenario number 2 then? So there we have option 1. The bull run is over. What do you think? Remember, always leave your comments below on what we're talking about. Now, option number 2 is 126,000 in October wasn't the all-time high of this cycle, and we will put in a new all-time high either in December, January, or February next year. Okay, bears, you've had your fun. Scenario 1 was just for you, and now I'm going to look at the next 2 scenarios, which are more bullish, I would say, for the long term of Bitcoin. And that is this. The bull run is not over. This is scenario number 2. Now, there's a lot of things we can look at here. We've already shown you a lot of data, a lot of charts, and I don't want to keep flicking through charts, so I'm going to try and stick to the facts in this one. Now, we are in month 19 of the April 2024 post-halving end of bull run. This phase kicks off 18 to 24 months after the halving. If we look at the 2016-2017 cycle and not look at the 2021 cycle, for example. So what we could see now is the consolidation of Bitcoin before the next blow off top. We still potentially have December, January, February, and March left for this cycle. Now, there are a few things that I'm going to get into that I haven't included in the stats, so I'm going to run them off now. The money supply that we mentioned in the bearish case, a lot of that is to do with the fact that Trump's policies, i.e. the reduction in income tax, the stimulus checks, the money flowing back into the economy, the cutting interest rates, these things haven't come to pass yet. And that's why potentially scenario 1 will play. But what if these things get turned on? Back in December of 2024, I made a video called Donald's Ducks. All of the ducks that Donald Trump had to have in a line for him to have a great crypto 2025. And the majority of them haven't seen the light of day. We've seen some interest rate cuts. We've seen some ETFs. We've seen some murmurings about the Bitcoin Strategic Reserve and everything else, but they haven't come to pass yet. And that, I think, is the key. The lockdown has taken 45 days out of the market. If we add 45 days onto a November all-time high, we're already in January. So the bull run hasn't finished. The bull run hasn't got to the end. So the Strategic Bitcoin Reserve, the altcoin ETF approvals for the likes of Solana, XRP, Litecoin, Chainlink, Hedera, BNB, even Doge is likely to get an ETF, and Pengu, of course. So we've not seen that too soon, and I've said this at the beginning of the year. We need those ETFs approved in March, April, May for it to have an impact at the end of this bull run. We got them in October. We've not seen the inflows yet to those ETFs. The Solana ETF, FYI, has had something like 12, 13, 14 days of consecutive green days. I told you in December last year The Ethereum ETF was doing better than people were saying. It was simply overlooked because of how well the Bitcoin ETF does. But you're not comparing apples with apples. The Bitcoin price, the Bitcoin market cap, 2 trillion, 2.2 trillion, whatever it was, Ethereum is a quarter of that. And that's what people missed out. So we don't have those ETFs yet. And because of that, we don't have the bullish narrative around them. And because of that, we are not seeing the bullish end of cycle yet. And that is important. The next step then is to look at the global M2, which I've just mentioned in the bearish case. This hasn't started yet. Q1 2026 is when we're likely to see it. In fact, I read a report only yesterday that the Fed bought so many $1 billion off the market, and there are people talking about the fact that the money supply is starting to tick up again, not to the scale that we saw during the COVID years, and it probably will never do that again, but it is starting to tick up. The Fed rate cuts have come too little, too late. We're probably going to get a rate cut in December. We should have had 3 or 4 rate cuts by now. If you go off Truflation's figures and not the government's figures, which are probably more accurate, we've been under 2% inflation in America for a very long time. It has spiked above, yes, of course. But on the whole, we don't need high interest rates. We need to stimulate the economy. So that liquidity surge will come. And then, if you believe the money supply gurus, 6 weeks, 8 weeks after that is turned on, that money will flow into Bitcoin. So we don't have the money yet. Stablecoin supply is almost at all-time highs. USDT, USDC especially, but don't forget, we have the likes of PayPal. We also have the likes of USD1. We have stablecoin growth. We have the Genius Act. We have Plasma. We have ARK. Stablecoin specific blockchains being created to allow transfer of funds back and forth. I didn't even mention Ripple, RLUSD. There are a lot of stable coins, and they're trying to compete for a bigger and bigger share of the real world asset market. That is all still to come. But stable coins means liquidity. Liquidity means price movements, up and down, of course. So this is a positive sign. Stablecoin starts to retract and starts to slow down, that will be a problem. Now, we saw the Bitcoin dominance chart, which we will bring back up. Now, what I expect from this is probably a breakout above the bull market support band. I expect Bitcoin to break back up, and that can happen in one of two ways. Either Bitcoin cannibalizes alts, i.e. the alts fall in price and Bitcoin collects all of that liquidity and pushes itself higher, or fresh money comes into Bitcoin, pushes Bitcoin higher back to 110, 115,000. It outpaces the alts, which then causes it to break up, then gets its blow off top, and then it falls. And that's when Bitcoin dominance will start to break down, and that's when we get the alt season that we haven't really seen. So Bitcoin dominance, I expect to break the bull market support band, maybe go back to 60%. I'm not going to sit here and call for 70%. Maybe goes back to 60, 62%, and then breaks down from there. Now, talking of alts, most of your alts, most of my alts, are down 70 to 90% from their all-time highs in 2021. In Bitcoin pairs, most of them have been wrecked, apart from a few exceptions. A few outliers have outperformed Bitcoin this cycle. It would be crazy not to talk about them. The likes of Hype certainly have done incredibly well, but they are new coins. If we look at the likes of the older coins, the Litecoins, certainly the Solanas and things like that, they really haven't outperformed Bitcoin. So we've not seen alt season, and we've never not seen alt season. But that doesn't mean we can't never see alt season. Let me also point that out there. It means that we haven't seen it come to pass yet. So we're undervalued compared to where we were. Now, there is the argument to be made that there are so many more alts, so many more coins for the eyes of attention. But even if you look at the top 20 coins, they still haven't ripped. Look at Litecoin, one of my favorite altcoin picks. I think it reached $28, $30. Its all-time high in the previous cycle was, I think, $47. So even Chainlink, 4 years on, 4 years better, 4 years more volume, is still nowhere near its 2021 peak. So there is a lot of room for these alts to grow. And I'm not going to sit here and say all of the alts are going to go back to all-time highs, because I've been saying for ages, most of them won't. But at least the big coins should get somewhere near their all-time highs. Right then, moving on. Retail. Retail haven't come back. We have not seen retail. I can say this from personal experience. If you look at the metrics for our YouTube channel, they are horrific. And I test this from time to time by making videos about Gary Stevenson or Zach Polanski or something that isn't crypto related. And I see a spike in traffic. So I know it's not the channel. I know it's the content. People are simply not looking for crypto content on YouTube. They are on Facebook, where the boomers are, but they're not doing it on YouTube. They're not really doing it on TikTok either. So retail never came back. Now, the only way retail will come back is if there is enough bullish news and enough bullish talk about Bitcoin. We should have seen them when Bitcoin broke 100,000. We didn't. So maybe retail never comes back, but they haven't come back this cycle, and they normally come back every cycle. When you start to see Coinbase and Crypto.com and the Binance apps being first, second, and third in the App Store, then you know retail is coming back. And we've seen that very briefly this cycle. Now, Plan B has basically got his argument that the 4-year cycle is dead. So we're going to cover him a lot more in the third option, the third scenario, which is the 4-year cycle is over. Now, the stock to flow model, which is why I'm leading on to this, this is targeting $150,000 to $250,000 Bitcoin this cycle. The power law fits around about 200,000 by mid-2026. This is validated by the price action we've seen in 2025 so far. Now, I've always tried to be conservative when we talk about the price of Bitcoin. And I said 140 to 150 was my top this cycle. And again, further out, if we go further back to maybe 2023, I said about 112, 114,000 was going to be the all-time high. But that was before ETFs. And I also said ETFs have broken the price of Bitcoin because they've overinflated it. And it's all well and good. You can read a chart until your heart's content, but the macro still plays a part. News and new sources of income still play a part in moving prices that a chart simply cannot predict. So my 115, 113,000, whatever it was, is wrong because of the ETFs. I think they bumped it up. So my 140 to 150,000 was still my original price plus about 25%. Now, the stock to flow model, it's like Marmite. People love it or they hate it. If they're going to go for 150 to 200, 250,000, I will err on the side of caution and go for 150,000. That is 20% up from our current all-time high. I do not think that is outside of the realm of possibility, but it's not going to happen now. We don't have the money. The bare points are worth remembering as we go through this video. The bare points are the reason where we are. They may not be the reason why we have finished, but they're the reason why we are where we are. So the stock to flow model, which has been pretty accurate most cycles, if it is wrong, then all cycles are wrong, and the 4-year cycle is over, and that's 0.3. But if we stick to the fact it's predicting 150 to 250, I'm going to go with 150,000, and I'm totally on board with that. Now, next point then, MicroStrategy. El Salvador, Qatar, Bhutan, many other countries. I think Argentina are getting in on the action. United Arab Emirates getting in on the action as well. They are accumulating Bitcoin and they have not stopped. And they are consuming as much Bitcoin as they can be. Now, at some point, there is going to be a snap. And that snap is the price of Bitcoin. And I've been talking about this as well for a long time. Probably at least the last 18 months. And that is this. There is not enough Bitcoin to go round. So two things can happen. We run out of Bitcoin, which has never happened in any economic model, or the price has to go to a level that people are willing to sell at. And that price for the OGs in Bitcoin has been over 100,000 because the OGs have sold 400,000 Bitcoin in the last 2 months. They've sold, they've gone. Maybe not sold out of all of it, but sold out of a big chunk of it. And the price still held 100,000 because MicroStrategy, El Salvador, the ETFs, they kept on buying. Okay, maybe that's where we've got exhaustion from. So we have treasuries this cycle that we didn't really have 4 years ago. Price is still coming down. That doesn't make any sense. And I want you to keep that in your head. And then finally, Bitcoin's 200-week moving average rises, or has risen, should I say, and it's bounced off this price in every single bull. November's test of the 84,000 low confirms no breakdown, just a healthy reset. So they are the points about which the bull run is yet to pass. And they do feed off scenario one, which is the liquidity and everything that we needed for that blow off top simply hasn't happened yet. And because it hasn't happened yet, we still have another, I don't want to say 4 months because I don't see March. I do see December, January, February, yes, but I don't see March. And the reason for that is it's just delayed. We've had a delay. Multiple different reasons, and you can't. The issue that I have with the M2 gurus is you cannot simply point at one individual data set or fact and say that is the single reason why Bitcoin is not filling my bank account with $150,000 Bitcoin. You have to look at it as a whole. The tariffs, interest rates, the money supply, the legislation, the Bitcoin reserve, all of those things have to happen. And unfortunately for you, we have left the Wild West and we are no longer going to be seeing overnight millionaires in the future. It's not going to happen. But what you're going to see is a slow, boring grind up towards new all-time highs. And that is scenario 3, which I'm going to talk about now. There's some hopium in those stats. Now, what about option 3? Option 3 is this. The 4-year cycle is dead. Now, a lot of people have been talking about this. Some very big crypto exchange CEOs have been talking about this. Coles, people that have been in crypto for a long time, talking about the fact that the cycle is dead. But what do we mean about the cycle dying? Let's go through the stats on option number 3 then. And that is the 4-year cycle is over. Scenario 3 then is 4-year cycle is dead, bros. That's it. Game over. No more 4-year cycle. Halving doesn't matter anymore. It doesn't have that much of an impact. The institution, the men in suits, they've all arrived. They've taken over. They're going to pump your bags and not some guy with Jesus complex. Okay? That's where we are. And that's where I want to focus scenario 3 on. And at the end of this, by the way, I am going to give you my conclusion on where we are. And a little bit of philosophy as well. But we'll get to that in a second. So, scenario 3 then. There's no 4-year cycle. Let's start off then with the elephant in the room. And that is institutional ETFs. Okay? They have broken the retail cycle. There are 11 spot Bitcoin ETF funds with $150 billion worth of Bitcoin. BlackRock, 95 billion of that alone. That's outpaced gold, and it has been the fastest growing set of ETFs in the history of the stock market. Bitcoin ETFs have outstripped everything. Bitcoin is now a top 10 asset in the world. Okay? We are comparing it in 2025 to 2021 and 2017 and 2013, where it was owned by overweight men with glasses, balding heads, and acne. Okay, not me. I'm talking about the younger kind, who talk about blocks and blobs and transactions and TXs. Okay, they've all gone. We're now talking about Brad Garlinghouse, Larry Fink, Jamie Dimon. We're talking about the men in suits. And those men in suits, love them or loathe them, are now the ones pushing this narrative. That's for Bitcoin. We can then talk about Tom Lee pushing the narrative for Ethereum. Michael Saylor, of course, and MicroStrategy, they've got 650,000 Bitcoin. These are men in suits. Some of them we will like and some of them we will not like. And the majority of them will turn out to be the villains. But for now, they are the ones steering the Bitcoin ship. So we've got institutions now, and we didn't have them. So if we've got institutions, why are we at $90,000? Why are we not at $250,000? Why don't the institutions just buy all the Bitcoin and be done with it? That's a question that I will answer at the end. So spot Bitcoin ETFs currently hold hundreds of thousands of Bitcoin. This creates structural demand that overrides the halving. November's outflows were a blip. The year to date is almost 30 billion. So November we lost 3 to 4 billion, but overall we're 30 to 40 billion dollars up for the year. So the halving, and we knew this would happen, Satoshi knew this would happen. The halving becomes less and less important because the rewards from halving become less and less important. 6.25, 13, 3.125, 1.6125, or whatever it works out as. They become less and less important over time. And the emissions, the inflation of Bitcoin, that is what halves. So the halving should probably have less and less effect. And again, I have called this the last great bull run, and that's because we're coming off the back of probably the last great halving. This halving, not so much. Institutional adoption is taking over, and that is really the key for me. So, institutions are here. ETFs are here. Nation states are here. Bhutan, El Salvador have guaranteed treasuries. We're seeing the likes of Argentina and Brazil talking about it. The United Kingdom and America already have some form or of a treasury, of a Bitcoin strategic reserve. This is a group of nations that, guess what? They are diamond hands. A national strategic reserve, by the way, it takes many, many forms. In America, it contains cash, gold, it will include Bitcoin, it includes oil, it includes wheat. There are many things that make up a strategic reserve. Don't think that Bitcoin is going to come in and become the strategic reserve of America. No, it becomes part of a basket, which is what we want. And that's important to understand. El Salvador are not putting their entire country's wealth into Bitcoin. They are adding to their portfolio, the same way that America will start to build up their 1 million Bitcoins in reserve. The UK has, I think, 60 to 80,000 Bitcoin as well. I think it's one of the top 5 countries. So nation states are buying. And as I've said many times on this channel, this is the one thing I got majoritively wrong. And I got it wrong because I didn't appreciate the speed of adoption. I expected it to be retail. I expected it to be treasuries. I expected the ETFs, and then I expected nation states. And what we got was treasuries, ETFs, and nation states simultaneously, which to me was probably one of the reasons that we have outperformed early on in 2025 compared to where we are now. So nation states are on board, and we're worried. The halving is less impactful. The 2024 cut is simply dwarfed by the amount of Bitcoin being bought. And I covered this again. I covered this when probably we were talking about this back in January or February, and I was showing you the amount of Bitcoin being produced on a daily, weekly, and monthly basis, and I compared that to the amount that BlackRock and the ETFs were buying. And to give you an idea, BlackRock in a week buy the total supply of Bitcoin mined in a month on their own. Now, they are probably 40% of all ETFs, so they are the biggest one, but they're buying all the Bitcoin. You throw Michael Saylor's strategy into the mix, and we are buying 4, 5, 6 times the amount of Bitcoin which are being mined every month. We're buying that off the open market. That cannot continue. Think toilet rolls during COVID. That's probably the best, most recent example I can give you of supply and demand. So the halvings don't really matter? I don't think so. The cycle lengthening. The 2013 and 2017 cycle, the 2017 to 2021 cycle were both 4-year cycles. The 2021 to 2025 extended to 4.5 years due to the 126,000 coming early. Does that signify that we are going to move towards a 5 to 7 year norm? That's the question. And the reason for that is Bitcoin is becoming more aligned with the stock market and the macro than it is to those spotty, baldy men I was talking about a minute ago and the halving. Okay? It's been taken over. Now, James, who you probably don't know, they wrote a song and there was a very famous line, "I've become the kind of man I've always hated." And Satoshi would probably not like to see what's happening right now, because this was set up because of the 2008 financial crisis. And now we're in a situation where the banks and the men in suits are now trying to control it. Probably not what he wanted, and maybe that's why the OGs are getting out. Who knows? Now then, the log regression on CoinMarketCap places Bitcoin in the lower growth channel at $91,500, with a 10x potential to the upper band by 2030. I do not believe that to be the case, but a lot of people do. And what we're talking about here is the $1 million Bitcoin. I think that will be a millstone around Bitcoin's neck. But it doesn't mean it's not going to happen. It doesn't mean Bitcoin isn't going to go to $10 million. Because remember, why does Bitcoin go up in value? A, yes, people buy it. But B, there's more money. And the money devalues. So your purchasing power of $100,000 today is $97,000 next year, $92,000 the year after, 85, so on and so forth. So in 7 or 8 years' time, we could see, without a single thing happening in crypto, we could see a $200,000 Bitcoin, simply because the demand and the depreciation in the value of the dollar will simply allow Bitcoin to rise. So you're comparing a finite asset with an infinite asset, which is the dollar or the pound or the euro or the yen. They can be printed into infinity, but Bitcoin can't. And what Bitcoin has is trust, and it has a lot of the tenets of money, and that is what makes Bitcoin work. The network, the trust, the lack of a third party in doing transactions, all of those things make Bitcoin what it is today. And I think that saying we're going to go to $1 million is going to happen, but it's not going to happen anytime soon. It might not happen till 2040, but it's on the horizon simply because money is being devalued, not because Bitcoin is suddenly going to do a 10x. So whereas I agree with looking at the log regression bands, I also think it's the fact that if you print 8% of your money every year, you times that by 10, your money has lost 80% of its value because wages will never keep up. So I think there is some merit in having the $1 million Bitcoin, but I also think it can be a millstone around its neck. The same way that $100,000 was a millstone, $10,000 was a millstone, 1,000, all of these psychological numbers, and I think Ben Cowan talked about this as well, all of these psychological numbers take time for the human psyche to accept. $100,000 Bitcoin, $500,000 Bitcoin, $1 million Bitcoin, they will all struggle at those prices, irrespective of what your favorite chart TA man tells you. Now, stable coins, as we've just mentioned, they are running to all-time highs. And one of the big things the American government is doing is putting a big emphasis on American debt-backed stablecoins. And they are pushing heavily for Web3. They're pushing heavily for the dollar. And one thing that people keep sleepwalking into is the fact that the dollar is going to become the global reserve currency of Web3. And nobody is paying attention. The Europeans are sitting there saying, we will not have Bitcoin, we will not have Bitcoin, while the dollar is running rampage in Web3. The pound, the digital pound, nobody wants it because they make it so difficult to create. So America has an open playing field for USDT, USDC, and others to just run rampant and go to $1 trillion, $2 trillion, $4 trillion, $10 trillion worth of stable coins. And then everything will be priced in dollars. But guess what? The debt of America will be transferred from America to Web3. And part of that is going to massively impact Bitcoin and massively improve the chances of Bitcoin being a success. Because if we have $1 trillion or $2 trillion worth of stable coins in crypto, that just adds all the liquidity you need for all of the treasuries to move on chain. And that's where we're going to go. We've got the likes of Maple that we cover. They are already dealing in on-chain lending. And that's where the future is. That's what's going to happen. We're all going to become part of Michael Saylor's Bitcoin Hotel in the near future. Gen Z and Alpha, they are looking heavily at crypto compared to stocks and shares. And this has been led by different, TradFi wallets, Robinhood, Revolut is another one. And what they're doing is they're allowing Gen Z to just go out and buy crypto. Now, this isn't going to impact today, but those Gen Zers, they're going to go and get jobs, hopefully, if AI doesn't take over. They're going to go and get jobs. They're going to go and get professions. They're not going to lose that investment into Bitcoin. They are growing up with Bitcoin. And the easiest way I can explain this to you is I grew up before the internet. You grew up before crypto. So you can't get a grasp of that just yet. But people in their 16, 17 and 18-year-old brackets, 20-year-olds who are just entering the workplace or going to university, they're putting $5, $10, $15 a week away into Bitcoin. Retail is here. They're just very, very quiet about it. So kids are here and kids are buying Bitcoin. And that's going to solve their future problems because they'll never have to sell the Bitcoin. They can borrow against it to get a mortgage. So the kids are here and the kids are buying crypto. Go on to X, you'll see loads of 18 to 20-year-olds talking about crypto, involved in crypto. That takes time, maybe another 5 or 6 years, and they will be fully into their working careers and still buying Bitcoin. The next one then, and these are two of the bigger ones for me, and that is volatility. And this is a big one I talk about all the time. You go back and look at any tech stock since its inception. Go back and look at Apple, Tesla, especially Tesla. Go and look at Amazon. Go and look at Facebook. Go and look at what they were listed at. And go and look at how much volatility they had. I've been watching the Tesla stock for, I don't know, ever since its inception. I don't hold any Tesla. I watched it. And boy, it would move 18% on a day, 12% on a day, 25% on a day. It was crazy. And guess what? It still moves now. And it's still volatile. And it's still classified as volatile. But it's moving in smaller and smaller numbers. And that is what Bitcoin is doing, because the amount of money to move Tesla at 1/10 of its market cap is a lot less than to move it today. And Bitcoin is a multi-trillion-dollar asset. You can't simply drag it down 85% anymore. You can't drag it up 85% anymore. It's too big of an elephant to move. And the volatility means, or the drop in volatility means, that you can't just expect Bitcoin to do a 20x every cycle. You know, if we take it from the bottom to where we are and where we got to, we're looking at a 7x. Now, a 7x on the largest crypto asset in 2.5 years is absolutely outstanding. Had you bought 10 Bitcoin at $18,000 and you'd have sold at the top, you would now have well in excess of $1 million from your $180,000. And how can you not like that? But we're not going to get that next cycle. We are not going to see a 7x. If Bitcoin retraces, and let's say traditionally it comes down, let's say this time it comes down 50% to 63,000, we are not going to go to $420,000 in the next cycle. Much as everybody will want it, I would be very happy with 200, 250, 300,000, but we're not going to go that much higher. It's just not there. The amount of cash to move it isn't there, unless nation states break the price of Bitcoin and maybe there becomes a war between the different countries bidding on Bitcoin. Then yes, but as it stands, no. So the volatility has fallen dramatically. And much as nobody wants us to compare it to digital gold, it's the closest comparison. But of course, they're not the same. It's the same as when you see a famous footballer, Garnacho, broke through at Man United. Everybody compared him to Ryan Giggs. But they're not the same person. But it's the closest that analogy can get. Or this is going to be the next Ronaldo or the next Messi. It's giving you a comparison. We all know they're not the same. So when Peter Schiff says Bitcoin isn't gold, when Peter Schiff says digital gold is not gold, we know that. We are simply comparing it so people can understand in an easier way. Bitcoin is a store of value. Gold is a store of value. They all have different utilities. They all have different ways of movement. Of course, you can send $100 million worth of Bitcoin in 2 minutes. You can't send $100 billion of gold anywhere without a very big truck. So we know they're different, but they are the same. And the last one then, the transition to a reserve asset. The ETF, assets under management, is now, as I've said, almost $200 billion. Dominance has become stable. It didn't break down. We didn't get the alt season. So we're not going to see the massive drawdowns that we've seen in previous years. We're not going to see that. We might see 40, 50% drawdown. But conversely, we're not going to see those massive rips to the upside. We're not going to see that because it's now no longer in the 4-year cycle. So I don't want to cover too much on this. I'm going to give you my conclusions now. But this is the third part of the video. We've done bear, starting, bull not over, and then the complete breakdown of the 4-year cycle. And now I'm going to tell you what I actually think of all of these 3 different scenarios. So we've seen the 3 scenarios, but before I give you my conclusion, I want to kind of go through something, which is there's something called Bayes' theorem. And Bayes' theorem basically highlights the fact that what we believe are our assumptions about the world. And Bayes' theorem looks at when you are presented with new evidence, how much should you believe that new evidence? It talks about being presented with facts and, most importantly, changing your mind. And this is the key. You believe in things, and you believe in things because you have assumptions about things. And those assumptions are based either on fact or what you've been taught at school or what you've learnt for yourself, or whether you are somebody who's seen it with your own eyes. So we can look at many different things. We can look at COVID. We can look at climate. We can look at Democrats and Republicans. We can look at MMT. We can look at all of these contentious issues. and we can say things about them based on our assumptions. And what's important is to study and understand new information that comes to light. And when we come to crypto, this is really, really important. I have stuck by the 4-year cycle, and I have said the 4-year cycle works until it doesn't. And the reason for that is that changing your mind before the event is not the right way to do things. You have to change your mind based on the data and information as best as you can have it. And the most precise information, the better it is for you to make a logical decision on the facts that you have at hand. And I've spent a very, very long time thinking about making this video. Weeks, probably. At least a couple of weeks. And the reason is simple. Nobody knows what is going to happen in the future. But what we can do is we can analyze where we are now to try and extrapolate where we can go in the future. So the 3 scenarios, if we apply this logic to them and the information I've presented to you today, 3 scenarios. We've had the all-time high, we're in a bear market. We haven't had the all-time high yet, and the 4-year cycle is broken. They are the 3 different scenarios based on the majority of what people think. Whether I look at somebody on X, whether I look at somebody on YouTube, whether I look at the facts that are presented to me. $91,000 in November 2025, when, according to the star signs and the charts, we should be over $130,000. We're not there. So then we have to say, what are the probabilities of each of these things happening? Well, clearly, we can look at option 1. Are we in a bear market? I would say we've got a 40% chance of that happening. We are already down 30%. If October is the all-time high, then we've literally got a ride down between now and October next year. That's a 40% chance of that happening. But that is based on old data. That is based on the fact that we're not including the ETFs, the nation states, and all of the other information we've given you in the last 2 scenarios. So that's why it's got less than a 50% chance for me, because we followed the 4-year cycle until the 4-year cycle broke. We can't go back to using the 4-year cycle if we can see all of this new information that's presented itself to us, which is everything I've presented in scenario 3. So I think there's about a 40% chance that that the bull run is over and we're going into a bear market. Absolutely. Option number 2 then, there is a new all-time high coming. I've only got probably, I would give that 20% chance of a new all-time high in the next 3 months. And the reason is, there is no momentum to get us back to a new all-time high in this short period of time. We needed to get that blow off top. And when we were looking to get the blow off top, the markets faded around us. The macro just stopped. The American government shut down. Everything that went along with the American government shutting down has put an end to this bull run. So I don't believe we're going to go to an all-time high in the next 2 or 3 months. And I would love to be proven wrong. I would love to be proven wrong. But whether we look at scenario 1 or scenario 2, we should still see a bear market in 2026 because it's the midterm. And the midterm is an external event to crypto. It's 2 years into the President of America's term. He came in January 2025, but he was elected in November of 2024. November 2026 or thereabouts is the midterms. And the markets don't react well to this. Depending on who is in power, a lot of time the market will rally out of the midterm. So the markets will go up after the midterms. They don't really do so well going into the midterms. So we can expect a really good 2027, probably not so much of a good 2026. So either scenario 1 or scenario 2, I'm 80-90% certain we're going to see a bear market towards the end of next year, irrespective of whether we have an all-time high in January or February, or whether 126,000 was the top. And as I said, 126,000 in October leads us to October next year. That ties in really well with the midterms. So I would say we've got a 20% chance of another all-time high in the next 3 months. So then scenario 3, and this is the one I've been thinking about for a very long time, because I am sick and tired of people saying this time it's different, this time it's different, this time it's different. But I think with where we are with adoption being so much more than where I expected us to be, I would say that the 4-year cycle is dead. And I would say there's a 40% chance that the 4-year cycle simply doesn't really continue or doesn't really have a mass effect on the price of Bitcoin. And what I think we're going to do is we're going to become more and more aligned with traditional markets. The S&P 500, the American stock market, the macro, the money supply, and everything else. And simply put, Bitcoin will become yet another a commodity. And that's what it will become. It will become a store of value. It has a finite supply. People will always hold it because it's a store of value. And that's what Bitcoin's role in the world is going to be. Now, obviously, there are many things yet to pass for Bitcoin. Using it as collateral is a big one. Getting towards more nation states holding the asset, the fall in demand, the fall in supply on exchanges is going to cause a price increase. So however you look at this, owning Bitcoin today at $90 or $100 or $120,000 is a very, very sound investment. And it will, and it has over time gone up in value. There are many, many, many more hurdles for Bitcoin to overcome. But look at what Bitcoin has done. 2 years ago, I would never have sat here having this conversation about the 4-year cycle. We had an anti-crypto Fed, an anti-crypto administration. We had banks blocking you from actively sending money to crypto exchanges and the likes. We had all of these things against us, and we still ran and ran. We got to 69,000. We had a terrible and brutal bear market. We had the FTX collapse. We had Luna. We had Celsius. We're still here. In the previous cycle, we had Mt. Gox. These things will always happen. But I think now it's time to start seriously thinking about crypto leaving its bubble, standing on its own 2 feet and walking. So for me, we are either seeing 126,000 as the top, and we will come down to October next year, or that cycle is dead, and we just simply need to watch the macro and see where it goes. And there will be people out there that will say to me, oh, Bitcoin has always been attached to the macro. Bitcoin has always been attached to the government or the money supply. And of course, those things have had a dramatic impact. But Bitcoin and crypto were so small 4, 8, 12 years ago compared to now. We're talking about an asset class that reached $4 trillion. We didn't get anywhere near that in 2021, 2017, 2013. So it's maturer now than it has been at any point in its past. And that's why I think that we need to maybe start to see it as a commodity. And if that's the case, then all of the alts that make a profit, have turnover, and have a use case will survive and thrive. And all of those shiny coins that don't make any money, they will all die. So that's my evidence. What I want you to do is leave a comment down below. What do you think we're going to do? Are we in the start of a bear market? Are we going to see another all-time high, or is the 4-year cycle dead? I'll probably run a poll on this as well. Let me know. And don't forget to like and subscribe to Crypto Warehouse. Let me know that you care, and I will continue to make crypto videos. Whether 10 or 100 or 1,000 or 10,000 people watch them, I will continue to make videos. But that is the end of this marathon session on the 3 different scenarios for Bitcoin. You have been great. I have been Mike. Take care.